Welcome to the WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Roshan Pujari, Founder, Executive Chairman, and Chief Executive Officer of Stardust Power, NASDAQ ticker symbol SDST. Stardust Power's mission is to secure U.S. energy leadership through the domestic production of battery-grade lithium. Stardust Power is developing potentially the largest battery-grade lithium refinery in North America, with the potential to produce up to 50,000 tons of annual capacity. Also joining us is my WTR equity research colleague, Peter Gastreich. Good morning, gentlemen, and thank you for joining today's podcast.
Good morning, Tim. Thanks for having me on today.
Morning. Roshan, for those listeners not familiar with Stardust Power, could you please kick things off by providing a quick overview of the company and its corporate strategy, and maybe tell us a little bit about your own professional background?
Happy to. So my background is as an entrepreneur and investor. I first got involved in commodities in the early 2000s in coffee, and then later founded a boutique investment firm, Vicasa Capital, where we have done over $2 billion in transactions. In 2018, we started looking at the very niche space of American lithium brine assets and started working with Stardust Power co-founder and chief technical officer, Pablo Cortegoso, while he was at SRK and was our lead advisor. At Vicasa, we did multiple investments into the space and really saw the critical gap of the supply chain being refining capacity in the United States. And that's when we founded Stardust Power to address this very specific gap of processing capacity. And that was in 2023 when we were organized as Stardust Power Inc. And it's been quite a journey since then.
I love that backstory. Thanks for that overview, Roshan. I will now turn the podcast over to Peter to ask a few questions.
Thanks, Tim.
Hey, thanks, Tim. Hi, Roshan. I'd like to dig into Stardust Power's operations and strategy. But before we do that, could we please start with a high-level overview of the current lithium and battery industry in the U.S., including the policy environment, and also how do you see the supply chain evolving in North America, starting from lithium raw material and all the way down the chain?
Yeah, happy to. So as many of your listeners might understand, lithium is a critical component of batteries that go into electric vehicles, to handheld electronics, those that the United States military has become so dependent on, to iPhones, but also for energy storage systems, or ESS, really being driven by the growth in data centers, especially for AI. Your listeners might also know that China dominates critical minerals, especially lithium production, where China controls up to 85% of lithium processing capacity worldwide. With rising geopolitical tensions, escalating trade war, recently China started overly restricting the export of rare earths and other critical minerals. It has never been more important to onshore processing capacity of battery-grade lithium products and other critical minerals in the United States. So while there is a tremendous demand and a projected demand for these critical minerals driven by EV adoption, which may be choppy, given the new political administration, but also the rise in ESS, it's never been more important to do this. So what we see, as though there's been volatility in the commodity price recently, starting in 2022 till now, we see those trends dramatically changing in 2026 and especially 2027, when we have substantial projected demand and a potential strong recovery in lithium prices. So we feel at Stardust Power, our timelines are very aligned with this change in the market economics. And the Biden administration, and especially the Trump administration, have been very aggressive from a policy perspective to create incentives to onshore this processing capacity. President Trump has rightfully mentioned that we are in an energy crisis, and they are dramatically changing policy to encourage production here, whether it's through the Department of Energy, the Department of Defense, for example, the Department of Defense Production Act, and other opportunities. So we see a lot of political as well as economic tailwinds for our project.
Okay, that's very interesting. Not all companies can say that they survive administrations like that, but you're definitely in that category. So, but taking this backdrop into account, can you please discuss your company's strategy and the role that Stardust Power will play in the industry? Within that, I'd love to hear your thoughts on the durability of your business model and what you see as the key competitive advantages at Stardust Power.
Yeah, happy to. So, our strategy is somewhat simple. We are building what could be one of America's largest lithium refineries, and we're strategically locating it in Oklahoma, right in the center of the country, in the heartland. And that gives us optionality of where we can secure feedstock as well as send offtake. So we really like our site in Oklahoma. The shovel-ready site is already connected to multimodal logistics. For example, it's connected to major rail, it's connected to major highway, and it sits on the largest inland waterway system in the United States, ideal for our hub and spoke model. And one of the innovations that we're providing at Stardust Power is optimizing this large central refinery for multiple sources of brine input, so we can aggregate supply and scale manufacturing up to 50,000 tons per annum of battery-grade lithium carbonate once at full capacity. So we're not limited to individual assets, and we believe that de-risks our project. And it coupled with that we're using proven and established technology, so really taking very limited technology risk so we can build this really big facility. We've been moving forward substantially on our site and development. So we see that focus on processing creates a lot of durability in our business plan. First of all, because America is blessed with a lot of lithium reserves. Previously, these reserves had gone unexplored for while America was offshoring critical minerals. But America potentially has the fourth largest lithium reserves in the world. And there has been substantial investment upstream into extraction of lithium, especially from brine assets. America has a lot of lithium brine assets coupled with a robust oil and gas sector that's often pulling these lithium brines as wastewater or produced water. So already a lot of that's in production, even if it's not being extracted. So currently, up to 85% of all these lithium feedstocks are sent to China to process. But as mentioned earlier, that case becomes a little bit more untenable in the current environment as tensions ride with China. To create security in supply chains, we're seeing a lot of feedback that producers and developers prefer an American home for their feedstock. The processing is a really meaty part of the supply chain, so we can create strong, durable margins for the long term, especially given that end users like that security of supply chain by processing in America. And it creates a de facto premium from sourcing from American manufacturers. And also, our project has the ability to scale. Phase one is building the first production line at 25,000 tons per annum. But as we build our facility, we can scale production very efficiently, further increasing our margins and making for a very durable project.
Okay, thank you. So moving back to Stardust Power and how you fit into the supply chain, when you look upstream, and you mentioned about how U.S. looks blessed with resources in terms of lithium, what kind of relationships is Stardust Power developing with your suppliers in terms of securing that raw material? And when looking downstream, where are you in the process of contracting your customers?
Yeah, great question. So from an upstream perspective, we've been really active. Currently, we control over 39,000 acres of premium brine resources in the United States that we can develop and co-develop with strategic partners, giving us an ample pipeline of feedstock. Also, we've been working hand in hand with producers and developers for creating homes for their lithium feedstock. It is unlikely that America will build 200 or whatever the number is of lithium refineries. We see the supply chain evolving more towards the oil and gas model, where you have production coupled with central refinery. Not every lithium feedstock asset will justify the large capex to build a refinery. So coupling localized production with central refining is a very strong model, and we've had a lot of receptivity to that model. In conjunction with our upcoming project finance, we'll be happy to release more information as these agreements become more definitive, and we really have a strong pipeline of supply. From a downstream perspective, we've been also very active. As referenced in a 8K filing in February, we have signed a non-binding letter of agreement with the Sumitomo Corporations of America to procure 80 to 100% of our phase one production of battery-grade lithium carbonate. And we are in constant dialogue with large OEMs, including EV manufacturers and other end users that have a substantial interest in securing supply chain, especially as we see this upcoming demand. And one thing that's been overriding in all of our conversations, that securing American manufactured battery-grade lithium is a priority for these end users.
And then sitting there, midstream as lithium refinery, it sounds like you have also some, upstream integration. What gives you the confidence that Stardust Power will extract that strong operating margin and sustain those project returns? Excuse me.
Yeah, so at Stardust Power, we're all about de-risking the supply chain. So initially, our focus is on processing, which, as I mentioned earlier, has very little technology risk, as we're using proven and established off-the-shelf technology, resizing that, of course, and building it in a very efficient manner. So we're really about de-risking. We can acquire feedstock for a lot of production in line one, and then over the medium and long term, move to vertically integrate. As technology continues to advance, we're confident that these margins will continue to increase, and the quality of assets will also help that margin. Here, we have a substantial value add through our Chief Technical Officer, Pablo Cordogoso, who really understands lithium brine assets. So we have a lot of optionality, from securing feedstock from proven and existing producers to developing internal assets. And in the future, we see the opportunity to acquire, to merge, or to integrate with upstream developers to create something uniquely special.
Okay, thanks, Roshan. So you appear to be the pioneers in this space, but what are you seeing in terms of the competition and what others are doing at this time?
One thing that's really interesting and really exciting about the space right now is that, given the overwhelming projected demand, coupled with the very limited production and manufacturing domestically, we see the ecosystem as largely collaborative. We don't necessarily see a lot of competition because near-term manufacturers will also be sold out. Exxon, for example, has announced a big move into the space, partnering with Panasonic. At Stardust Power, we're partnering with Sumitomo. So very little domestic manufacturing coming online in the short term, and we see these projects that will be able to be sold out prior to being that. Over the medium and long term, additional players might come online, but there are long lead items and long lead times to bringing these big pieces of infrastructure online. So given that there's a national security priority, I see that American companies are really collaborative rather than focused on competition. There's often exchange of best practices, best ideas, and we stay in communication with many of them.
Okay, thanks, Roshan. That's been a great operational overview. How about the financing and capital strategy for Stardust Power? What are the key elements there?
Yeah, so financing these big projects is a vital importance. So we kind of break it down between two phases of capitalization. Pre-FID capital, which is development capital that we have been very successful in raising over the past couple of years. We've raised approximately 35 million in different forms. And so we'll raise a couple of small tranches of development capital, if you will. And then the project finance for the phase one facility, we are working with our lead financial advisor, MUFG, one of the largest banks in the world. And we're putting together a very efficient offering. Once again, given that we're using proven and established technology, we see the potential for very high debt coverage, up to potentially 80%, minimizing the equity contribution. And as we're seeing from strategic investors, financial investors, and even off-takers, a shovel-ready lithium manufacturing project of this size in the United States is a very attractive option. So I think the kind of the last gating items to continuing that process is our upcoming announcements and supply. And then the definitive feasibility study, or FEL3 engineering study, which is largely completed by our EPC, Primero USA. And we look forward to releasing details of that forthcoming. With those two substantial milestones being achieved in the short term, we will have accomplished everything necessary to be shovel ready and then to bring in that project finance.
Okay, that's great. So I've got a question here that we'd like to ask all of our guests, and give the opportunity to address or clear the air on what you think investors may misunderstand most about Stardust Power, or potentially are underappreciating today.
Yeah, great question, and thanks for that. I think the first thing to look at is that the lithium market itself, has been volatile. We see across the board that lithium companies are down up to 85%, because prices are low, probably near the bottom. But the first thing investors should understand is that the demand and projected demand for lithium is substantial. It is a critical component of the energy transition, energy storage systems. So being able to manufacture American battery-grade lithium is a wildly attractive proposal. And that might be true when reflected in our share price as well. We've had a lot of volatility in the past couple of quarters. But as we continue to de-risk our project and start construction of one of the largest, if not the largest, lithium refinery in America, there is substantial value there. And we believe equity capital markets will see that value as we continue to move forward. And so we're really bullish on lithium and really bullish on processing. And then the other thing I think is important to consider, as I've mentioned a few times already, the limited technology risk in what we're doing. There is a lot of investment upstream. There's feedstock being produced, more feedstock, but processing, an American home for that, is really an important part of the supply chain. And there is a lot of value given the limited production in the United States. So we see the focus on processing as really important. And another facet is our mantra has always been speed to market. So one of the things that separates us is how quickly and efficiently we've been able to develop our project as a newly incorporated company in 2023 to a near shovel-ready project here in 2025. We have been focused every day on executing our business plan and not changing it substantially. So speed to market is a big mantra of ours.
So finally, looking ahead, Roshan, what do you think would be the key signposts that investors should be focused on over the next 12 to 18 months?
A lot of exciting opportunities coming up. So as mentioned earlier, shortly we'll talk about our supply, which is a significant milestone. Then we'll release our definitive feasibility study, and that is a really big milestone. It will go into the CapEx, OpEx, and the engineering profile of our facility and making us shovel ready. So those two large milestones in the short term. And then with the advancing project finance, we'll see as we complete various pieces of that, whether it's equity financing, whether it's debt financing. And there's also opportunities for other buckets of non-dilutive financing, such as prepayment or government grant. The Oklahoma Department of Commerce has already given us analysis of up to $257 million in largely state incentives to develop our facility there. And then we'll start on the construction process, which typically lasts 18 to 24 months. We'll have construction milestones, our opening and then commissioning of our facility obviously is a huge milestone as we move into a revenue company where we see, the value of our company should advance exponentially.
Okay, thanks, Roshan. This is great. We really appreciate your expertise here on the industry, and congratulations to the team at Stardust Power on the many milestones you've achieved so far. You're genuine pioneers. We're running out of time here, but before I pass back to Tim, I'd like to give you the opportunity to provide any concluding remarks or address anything that we might have missed today.
Well, thank you, Peter. Really appreciate it. It's great to be on the WTR Small-Cap Spotlight. It's great to see your expertise in the space, and I appreciate the opportunity to talk about Stardust Power. And maybe the last thing I can say is, we see it's a national security priority to develop these projects in the United States. So really happy talking with you both today.
Could not agree more with that last part you said. I mean, it is truly critical to the United States. So thank you for joining us today, Roshan Pujari, founder, executive chairman, and chief executive officer of Stardust Power, NASDAQ ticker symbol SDST. And thanks to my equity research colleague, Peter Gastreich, for also joining us. And finally, a special thanks to the producer and editor of the podcast, Joe Brunetto. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast.